Broadcast. Happy July 5th. Welcome to the Friday edition.
Happy birthday, America.
America. July 5th, almost as good as July 4th. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. I am Joe Nikruto, Zaner Ag Hedge Joe on Twitter or X. And with me...
And I'm market strategist Dan Hussey here at Daniel Hussey Jr. on X as well. And
As
Dan
always.
SOTD on the Facebooks.
Say that one more time, Dad.
Dan SOTD on the Facebooks. That's my
Very
page
good.
where I do that strategy
Very
of the day.
good.
Haven't been doing it recently, but now that I think we've hit some extreme levels in the agricultural markets, which we'll cover today, probably a good reason to get back on that horse.
Who needs a good reason to be back on the horse?
Exactly. So
This week found us with a day off in the middle of the week. I can't tell if today is Monday or Friday. My body, I have holiday lag. Some people get jet lag. I have holiday lag. What did you guys do there in your neck of the woods for the 4th?
So we had a little mishaps in Wheaton at the DuPage County Fairgrounds with our firework display this year. It was cut abruptly short. A lot of you might have seen it on the news because some mortars were fired into the crowd and towards the parking lot. No one was injured, no one was hit or anything, but we were watching it from a little further back because we got a little one. So we were several miles away on a hill watching it from a distance, and just biggest letdown, right? You're 15 minutes into a firework display. It abruptly ends. You have no idea why. No big, grand finale or anything. But it turns out there was I don't know what caused it, but some mortars were fired at a low level, blew up near the ground and towards the cars, and they decided to end the show abruptly. So we were left without knowing what happened till the next day when we saw it on the news ourselves. But otherwise, a great, relaxing 4th of July. Still got to see some fireworks, spend time with the family, grill some burgers, drink some beer. As it should be.
Fireworkus interruptus. That's just that's got to be very unsatisfying.
It was a little bit of a downer in a year where you kind of need that pick me up, But you, Joe, what did you do for the 4th?
I went to fire up the grill at 8:30 in the morning Central Standard Time, or maybe
Were
not
we
fired
smoking
up.
something?
Yeah, we got to smoking, no doubt about it. Smoked some
Okay.
of America's finest pork and some of America's finest red meat. It was a little toasty, some rain, but got it all fired up and heard some fireworks and looked at the phone to see what time it was. 8:30 Central Standard Time. And I'm not talking about firecrackers. When we were kids, Dan, this is long before you were born. When we were kids, we would get on our bicycles at this time of the year in a fever and try to hunt down explosives. And we would go anywhere to get, with all the change that we could scrounge from, wherever we scrounged change from, could be $14 worth of quarters in a sack that we would go out and try to spend on a gross of bottle rockets. That's how we rolled when I was a kid. And here I am, 8:30 in the morning, and some kids are lighting off mortars, and not one mortar at a time, but 3 and 4 and 5, boom, boom, boom. And I thought, 8:30 in the morning, what a tremendous commitment, the fever that those kids must have, so it's a different world now, where we're blowing off, major explosives at 8:30 in the morning on 4th of July. But the smoking.
Every year I become more and more impressed with the civilian firework displays. You know what I mean? Like, it's not even the mortars when I was a kid, they were the little, maybe this big round things that, okay, there was a nice little bang and a couple flares with it. But now, wow, the stuff that you can get your hands on, not in Illinois perhaps, but in your neck of the woods.
Yeah, well, where I live, we were just talking about this with folks in the office last week. Somebody was putting on a little pre-4th of July party and shooting their mortars out of PVC pipe. And there was some similar to your Wheaton, DuPage County malfunction. Their mortars either went off in the tube or went off right above the tube and put 4-inch holes into their home and the homes around. And quite a story, and quite almost a true Jesus miracle that, there were 4-inch holes in homes and not 4-inch holes in friends and family.
Oh, wow.
And
remember, folks, we're not condoning shooting off fireworks. Shooting off fireworks is dangerous and then should only be left to the professionals, just like futures trading,
yeah,
right?
Exactly.
Just to be clear.
And so, since you mentioned that, this week the professionals have done some trading, and you would think, okay, it's a holiday week, nothing's going to happen. But with the exception of corn, where trade was a smidge muted, we've seen some pretty decent trade, don't you think?
Yeah, this has been an interesting week, right? After last week's hair on fire sell off there after the USDA report, right? The Bears not finding the ability to push things down. And actually, into the end of the week, I know you'll give us the numbers in a minute, but we were just talking soybeans positive on the week, higher highs, higher lows, meal and oil looking great. Corn, a little bit of a dead cat bounce look to the market, but generally speaking, we haven't gone lower. So, like, that's a win in my book. Wheat turning maybe a tide here, but that commitment to traders here due out in just a few minutes is probably going to show
next week
an increased. Because of the holiday,
1 day late.
So we'll get that on Monday. Excuse me.
Yep.
It's probably good because it was taken earlier this week, right? It's probably going to show a little bit of a bigger short position from the funds, but I don't think that's necessarily a bad thing just because we're starting to hit that extreme sentiment that we're seeing across social media, as well as, record short, quote unquote, in that fund category is now on the tongues of traders.
Let's jump right in then to the weekly numbers, because
absolutely.
And what you're talking about is the fund short position in corn, which our friends at ADM was we're estimating was 303,000 contracts coming into the day. Corn opened the week at 419.5. We're talking Deese corn here, 419.5 to open the week. High was 426.5, low 414.75. Last trade I saw was about 424. That's up 3.25 on the week. You're right. A bit of a bounce. Probably more important in corn than the distance it traveled is the fact that it has stopped, at least for now, stopped going down, right? Funds short, 303,000 contracts. Muted was the word I wrote down. Trade today and maybe this week. December corn still sort of technically stretched out. I'm not sure that that's a John Murphy term from the book, the official technical analysis book, but we feel stretched away from the 10-day 432 and the 18-day 447.75. With this week's close at 424, I mean, Dan, we're a bit away from these technical levels, wouldn't you say?
Yeah, we really are. Corn has a long way to go relative to our other row crops, right? I mean, you look at, I guess wheat is only just getting back there, but soy products have all just absolutely blown through some of those technicals that we'll talk about in a minute. But for the corn, right, we are a long ways away from December corn here, 447, 18-day moving average. That kind of takes you back to not the neckline, but the lows of February at this point. I'm hopeful that we'll get a test back to those levels. But, I think the one, rosy picture on this chart is that we have completed that head and shoulders pattern we've been talking about. The neckline break from 460 has now resolved down to that 420 target, which is simply right from the start of the left shoulder moved through the head, extended lower, takes you down to that 420 target. So not necessarily reason to be a buyer on the corn just yet, but certainly might be giving some of those funds and those, in the short category, a reason to start covering those shorts. And if we have a big short anyway, well, a little bit of a reversion to the mean here wouldn't be off the schedule, in my opinion.
And you and I were talking before we went live. There is probably going to be some discussion in the next week or two in terms of simply the size of this corn short position. 300,000 contracts, I believe, is, if it's not a record for this time of the year, it's very near a record.
Very near, yeah.
Not exactly prone to being this short at this time of the year. And so the question you and I were discussing is, okay, so if we're looking at 2014 as a potential analog year, and heaven forbid, but if we are looking at 2014 as a potential analog, how short were the funds coming into the beginning of July, or how short were they in week 1 in July?
Right.
And as
and
we
a
have
little bit of a different market too, right? It can't be a direct one-to-one because there's a lot more money now out in the markets compared to back then.
Correct.
Or
rather,
relatively speaking,
a way to say that would be more money that could arrive right? And they've got some other positions on that they have done very well in addition to these. And so they could, what you're trying to say is they could have more bullets to put into the gun.
Absolutely, right. Like just how cheap money had been over the last 10 years offers in terms of cash reserves that funds can use and spend in the market are bigger these days than they were in 2014. We can't put a direct number on that, but generally speaking, if you just take the monetary supply as your barometer, there's a lot more money out there in the entire economy today than there was 10 years ago.
And I have a feeling that this fund short position is going to be the topic of discussion as we come into next week. And I'll bet we'll have an answer real quick in terms of where they were and where we think they might be able to go. And maybe the market taking this breather is doing exactly what you're saying, is that maybe the funds are going to have to look at this very carefully and decide if they want to be short 300,000 plus contracts, or are they taking it to what's 380, 378? I can't remember what the number is.
Yeah.
Either way, it's going to be an interesting
something lower from here. Right?
Yeah, you know it. How about wheat? We opened the week 573 and a half. High was 592 and a quarter. Low 567 and three quarters. Closed last trade I saw in September wheat was 590 and a half. That's up 17 on the week with a still short, estimated short. Right. 71,000 contracts coming into the day in Chicago wheat with an 18-day moving average at 596. So we're close, right?
Yeah, but at least, starting off the month of July here, completely changing what we've seen in wheat since, the end of May there, right? June was just straight down with maybe 1-2 green days on the actual candles, maybe 1 or 2 days. 1 or 2 days you could have actually maybe taken along and made something of the day.
What a wild ride.
596, that 18-day moving average, 100-day moving average just above us at 614. Then actually right smack dab between the 100-day and the 55-day is that 200-day at 626, and a half, and 641 is our 55-day moving average. So cluster there of moving averages between 614 and 640. That's also around a 50% retracement of the entire decline. The fact that we've made not quite a double bottom, but for all intents and purposes, about a double bottom into that 560 to 550 area, I would not be shocked to see a little bit more of a bounce here back towards those moving averages. But I'm not willing to say that wheat has completely turned a new leaf and that this is the major low and we're going back to $7 just yet. However, I will say that we have changed the dynamic of the trade, right? No matter no matter how you look at this chart, that precipitous decline in wheat since the end of May through the month of June, whatever that selling pressure or algorithm or whatever it was causing that, something's changed. At least that's the way it looks on the chart.
Black Sea crop stress with heat.
There's definitely a narrative there to talk about. And we can talk actually, not to jump back to where we were with corn here or talking about with corn, but in that fund position with corn. But, we're oftentimes now wondering what's the narrative that's going to change things and make them cover at this point, right? Because we've got a pretty good growing season so far. We don't have the threat of heat that we've had in years past. That can all change, of course, but sometimes these things aren't going to be weather related, in my humble opinion.
Harvest pressure abating with the U.S. harvest well past the 50% mark, and some folks, some talk that folks thinking that this could be a seasonal bottom in wheat, and
could be.
And it's been hard to find anybody to talk that way with the way, as you just mentioned, the chart has come from
even though I want to scream it, right?
It is.
Yeah. No, even though I want to scream about it being a low and the low is in, you got to be at least a little humbled by that sell-off,
And the other side of that coin for me is, and this is not the most scientific thing I'm probably going to say all day, but it feels like markets just don't trade that way, right? I mean, that has been a very violent one-way ride. It was a violent one-way ride up and then a violent one-way ride down. And so, what do they used to call it? The old Stoudemire guys used to call them the outside time frame participant. These are somebody here in this market that maybe had not been there before. And that's, I don't want to get too far afield, but here we are starting to stabilize. and it's going to be very interesting to see where we go over the next couple of weeks. How about beans?
And one last comment on wheat. Right. Let's not forget that the sell-off really began from $10 to $12 in wheat, depending on what contract you looked at back, a year ago or a year and a half ago, whatever, maybe 2 years ago now. I forget. It's been such a declining market. So the daily chart might be too small of a time frame to look at. Maybe you have to go out to the weeklies and monthlies to really get the bigger picture on wheat. And that's how we got all the way down here. Right. And that's, to your point of that, there's a bigger trader or there's a new trader or something new and a dynamic happening. Those outside moves just move to a bigger time frame, for some of your analysis here.
For sure.
On to the beans.
November beans opened 11.04. The high was 11.33 3/4. Low was 10.97. We closed November beans at 11.29 3/4. That was up 25 3/4 for the week. Funds short over 100,000, estimated 114,000 futures contracts in November in the beans. Outside week up, back over both the 10 and 18 day. What do we say about that?
Yeah, we closed above that 18-day moving average, which is just below us. That I think I see there at about 11.27. Yep. That's actually absolutely right. The 100-day and 55-day moving averages are above us here at 11.67 for that November contract. September contract. Let me pull up the 11.68 in the November. Might as well be talking about the same thing here. Yep. And that is actually where, if you draw a trend line against the lows from February through April that we broke below and kind of began this, downtrend to the $11 mark, that trend line, that broken trend line, maybe now resistance is up around that area too. The 200 days all the way up there at 1209. We won't even talk about that level just yet, but a reversion to the mean now, back to that 100-day and 55-day moving average, back to that broken trend line. It's a 50% retracement from the 1230 high that happened there in May through the lows here of June. We've got higher highs and higher lows for a few days now. Something has changed on the bean chart as well. And I know you're going to give us the numbers on meal and particularly bean oil here in a second. We'll go over some of the technicals there. Something's definitely changed in the bean complex. And I would not personally be looking to get speculatively short at this point because of some of these changes. You're getting above that 18-day moving average. That's a good reason to see shorts cover. And if there's 100,000 shorts still, how the real question is if those shorts start to cover, how high can this market run? I don't think getting back to that 1168, 1170 area is out of the question. But
a lot of
that's
talk.
Still 40 cents higher.
A lot of talk about no new crop commitments yet from the Chinese. Mm-hmm. Yet the new crop commitment for unknown, that number might be getting that number's getting interesting, right? And I'm not sure who else.
Chinese.
Yeah, right. Yeah, and so unknown, if they live next door to the Chinese, it could be that the threat of Chinese purchases, or maybe the hope of Chinese purchases. That was the question today. Is there maybe some Chinese business? And so sure. I guess we'll see. And at these prices.
And there very well could be, right? These prices are very attractive, both on the international scale. And let me pull up a dollar chart right now. I know we've had some big swings in the dollar, but the dollar has declined over the last few days while beans have rallied. That's an interesting dynamic here, right? Not to say that the dollar is weak right now, because it's actually very strong relative to the last year of trade. But the dollar weakening while we see beans start to come up, is there something happening, right? Are we, should that be a precursor to maybe expecting some Chinese purchases? I'm not saying it's going to happen. I'm saying if it starts to happen along those two things occurring, hey, I mean, there's a player here who buys all of our beans, starting to buy all our beans again. And they've been waiting in the wings for maybe this exact moment, right?
And technically,
being an election.
Go ahead. Mm-hmm. Go ahead.
No, I was going to say, and being an election year, and the unknowns that come in November, I'm kind of shocked that the Chinese have waited so long if they are starting to get active in the market, because we don't know for certain yet, but we'll start to see those, sales pop through and exports pick up if that's the case. If they are intending on catching up, they've got a lot of catching up to do before the unknowns of November come around the corner. And, that's just I think the bright spot maybe for soybeans is that everything else has aligned at this point, in my humble opinion, to maybe start to expect some of those purchases. I'm not saying it's something you run out and bet on, but it's certainly, hey, pay attention. If the tape starts to show it and we see the exports coming, we have all the rational clues as to why.
And what you just said, we're seeing on the chart, technically speaking, an outside week up.
Yes.
You have arrested the downward move. You've closed out. You would not. It would be okay if you were to be expecting further upside price action as we begin the week.
Just from a technical perspective.
Just from a technical
perspective. And if we can make a case for the fundamentals of exports coming in alongside of that, now we're painting the picture and the narrative of why, right? We're not just throwing spaghetti at the wall.
And that's been the question. So with these fund positions, we say, okay, we notice that the market has stopped going down, but what is the headline that causes them to cover? Chinese business, if you look at meal, you're talking about August meal, the open this week, 346, the high 359.70, low 344.10 for the week. Last trade I saw was 357.20. That's up 11.20 on the week in August meal. And the long there still this long hangs in there. They estimate
persistent.
101,000 contracts in August meal. So that is rather interesting. And we're going to be, I think by rule, we're required to mention the meal deal, right? Meal is kind of hanging in here. Oil dragging.
Even at a time when we would think that, that fund pressure would reverse price action and that seeing the meal long in the fund category doesn't make me very excited just from that alone. But when you weigh in all these other things, it makes you wonder if there aren't active participants here that are saying, no, this thing needs to go up, right? Sometimes the funds are right. And maybe in the meal positioning, they've actually been, hitting this one. Obviously, they've been right on their positioning elsewhere too up over the last several months. But hitting that 55-day moving average as resistance today, or right about 358 there, 200 days above us at 367. I wouldn't be surprised to see us get through these highs at around 360, which have been holding effectively for the month of June. We push through that. There's no reason we can't potentially get back up to those highs of May as well for the meal.
Sounds positive. For oil, in the August contract, we opened at 44.07. The high was 49.78, low 44.02, 49.56. Last trade I thought I saw in August oil. That's up 5.48 on the week. Rally mode continues, but funds are short an estimated 76,000 contracts. So that is a rather violent upside move over the last number of, I can't picture how many days in my head, Dan, but it's been some days, has it not, kind of straight up here?
It's been 4 days straight up. Basically, on the 1st of July here, we closed above that 18-day moving average at the end of the month of June. And then the 1st of July, we just had a rip your face off rally that took us through the 55-day moving average, and that close above the 18-day was at like 44. We closed above both the 18 and 100-day moving averages, the 55-day, which was at 44.84. 45.09 with that 100-day moving average. We closed above those levels on that first of the month. The next 2 days, we basically rallied straight up to the 200-day and through it. We have seen no resistance holding. I mean, we are right back here basically to the highs of March and April now, and unwinding what was otherwise 3 months of downward pressure in the bean oil in just 4 days' time. I mean, when you've heard the term "rip your face off" rally, that's what I see in the oil going on right now.
If I'm hearing you right, we have surmounted all of those merely derived technical levels. We're above 10,
and
18.
Today was actually a pullback to start the day into that 200-day moving average at 48.14. Lows of the day here at 48.05. We held the 200-day as support and closed at 49.55. $1.40 above that level.
So purely as an exercise, right? We predicting the future, predictions very difficult, especially about the future.
Oh yeah,
the man said. But when you look at that chart, how high can it go?
Well, we are right into that 50 area, right, which was the highs of March and April. There's a little congestion here and maybe some support prior on the chart into the end of last year. So now we are unwinding the entire downside for the year of 2024. We start going higher above 52, you're starting to break out into the 2023 range, which took us up to 60. So I'm not saying we're going there right now, but if this thing wants to keep going, it certainly has been there before.
From a technical perspective, that's where you would cast your gaze. And so, like you said, we can't be sure. Who knows what the fundamentals are going to be? But when you look at a chart.
Hey, I'll be the first to admit, too, we are up into the major resistance zone for 2024, right? Like we are almost up into the highs of the year so far. So you wonder if this 4-day short covering rally isn't getting a little too long in the tooth. But if it wants to, and we start to see it press above those levels, I mean, like I said, it's been up here before, and the last place it quit was around 62.
Wow. Well, we'll certainly keep an eye on that. How about that?
Mm-hmm.
How about a news story?
Let's go.
Vilsack critical of commodity increases. Chris Clayton from DTN put an article out. Agricultural Secretary Tom Vilsack said the House Ag Committee did too good of a job of trying to satisfy everyone with a bill that boosts spending on farm programs and research.
I don't mean to cut you off, but talk about a guy tooting his own horn and patting themselves on the back.
Well, hold on. Let me hold on 1 second. We got to mention every week. We got to talk about waiting for him at Commodity Classic. Those dirty dogs. And here's what Vilsack had to say. It's a bill that I think is very politically astute from the standpoint that it offered members of that committee a lot of what they asked for. Vilsack said, everybody for the most part is reasonably happy, except you have got to pay for it. Therein lies the issue. Reference price increase helps producers of 22 crops nationally, but also shifts funds from people who need nutrition assistance to larger commodity producers. The bill also provides too much support to the largest commodity farmers compared to farmers who rely on other USDA programs for support, Vilsack said. The House bill, which cleared the committee in a bipartisan vote in late May, would increase the statutory reference price for crops by 10% to 20%. Boosting the statutory reference price will then boost the calculation used to create the effective reference price. The House bill also plans to restrict the Agricultural Secretary's authority to use the Commodity Credit Corp, CCC. Vilsack noted some of those funds are used each year to help support local food banks. Billions of dollars, he said, in the last several years. The Secretary also pointed out there is a conflict between the chairman of the House Agricultural Committee and the Congressional Budget Office about just how much would be saved by restricting USDA's use of CCC dollars, said Vilsack. I think it's important to support production agriculture, and this is Secretary Vilsack speaking. I think it's important to support production agriculture. We need to continue to do that for sure, and that's really important. But at the same time, can we be smart enough to create a companion program so that those small and mid-sized folks are benefiting from multiple sources of income, he asked. The Secretary pointed to USDA's work to create climate-smart agricultural programs, incentivize a rural bioproduct economy, and boost farm revenue through local food systems such as farm-to-school programs. He also pointed to the terrific demand for renewable energy projects through the Rural Energy for America program, the REAP, REAP. So that's.
I mean, I love talk is cheap.
There's a lot of talk in there
cheap.
too, right? That's a lot.
Talk
of talk
is cheap.
That guy should be a
If
politician.
demand is so good, then why are we dragging our feet with all the SAF and all the other programs that could be putting more dollars into the pockets of producers? Okay, you know what I mean? Like, I love that you're saying the things, but now start doing the things. That's
very good.
That's all I got for it. You know what I mean?
That, yeah.
Yeah. Well, Deere cuts jobs in Illinois, and Chris Clayton from DTN is reporting here that Deere has reported to the Illinois Workers Adjustment Retaining and Notification, or WARN website, that 503 workers would be laid off at its plant, in East Moline, Illinois, starting as early as September 20th. And Joe, you were saying earlier, they might be heading to your neck of the woods.
Well, I think that's exactly what's happening. All of you Illinois people are headed to Indiana sooner or later, one way or another. But big story this week: John Deere building a very large facility, and I think it was a warehouse facility off of I-65 in South Lake County, Indiana. And you got to wonder if this is the beginning of some of the stuff that they're talking about in this article. But for that neck of the woods, quite a coup for them to attract a company of the caliber of John Deere. And this could be, certainly nobody wants to make the commute from Moline to Lowell, Indiana. But I think this is what you're seeing here, is that maybe a production shift from state of Illinois. I'll stop talking and let you finish reading.
No, I mean, but I think you're onto something. People are voting with their feet in that regard. Illinois has lost 80,000, people a year for the last 5 years, and it's cost this state $14 billion in tax revenue. I mean, it's happening. And you know what? A move like this, I get it. I get why. But anyway, Iowa's Warren website also showed 211 jobs in Davenport, Iowa, and 99 jobs in Dubuque would also be cut by the end of August. Deere already cut 835 jobs early this year from their operations center in Iowa, the Des Moines Register stated. The tractor manufacturer did not issue a statement on its cuts, but it did state to Fox Business News that we can confirm Deere's leadership recently communicated that rising operational costs and declining market demand requires enterprise-wide changes in how work gets done to achieve our goals and the best position for the company in the future. Deere suggested that the company would potentially shift operations to other locations with lower labor costs, and this includes optimizing our factories for future production, making our operations more efficient, and taking advantage of local locations in the U.S. and globally with a growing labor force. These cuts come as the USDA reports net farm income has dropped in 2024 by more than 25% to $116.1 billion, and receipts for the crops are projected to fall 6.3% for the year, while overall production expenses for farmers are expected to grow 3.8% for the year.
Certainly a difficult recipe on its face, right? Income's coming down, expenses going up.
Yep.
At the same time, you've got statewide challenges for business. It's not a recipe for long-term success, I think.
No. I mean, I think we all knew that, or you should know that in this coming out of an inflationary like move in markets, there's a lot of adjustments that have to be made and will be made throughout the entire economy as, companies, people, and everybody tries to make the right decisions for themselves and how to deal with that, right? Well, if that means that people and population of Illinois is dwindling because of that, because of higher taxation and costs of living and everything else, well, we're going to see similar moves here in companies, and John Deere is just one of them that is openly telling you what is going on.
And they make it sound like it's an easy shift, but there are people behind these numbers, and you just hate to see that kind of dislocation. It's,
right. We can talk about the numbers all you want, but the people that are affected by it. That's the human cost, right? That's not something to make light of.
For sure. Dan, do you think that there is anything? I know that we've had kind of a bifurcated week, right? I mean, it's like we were here before.
Weekend after weekend after weekend, right?
It's just getting, it'll wear on a person. I was telling the fellas earlier this morning that I had set out, I had a 12-pack of some Busch Light with in the Superior corn can and had it iced and was ready to really do my part, Dan. And didn't get around due to the cooking and due to taking the kids to the fireworks. I actually did not get around to drinking any beer. And so I think that this weekend, maybe I'm going to redouble my efforts and focus on my commitment to myself and drink them damn Busch Lights. You know what I'm saying?
Well, it's going to be a beautiful weekend from what I can tell, at least in my neck of the woods. I'm sure it will be in Indiana too, because you just get the same weather we get a couple hours later.
I think it's just less expensive with less government regulation, I think is what it is.
Oh, I see what you did there.
Pretty much the same weather. Yeah, just less government intervention.
Well, I know we got a question from the week from our producer, Carter, over here.
Question of the week. Okay, Carter, got us again. If you could instantly master any skill, what would it be? We need to get Tony on the line and get it. Tony gave us a lot of time last week to answer our question, right? When he sort of struggled with that. You're going to master a skill. You could do it right now. What will it be?
Okay, I'm gonna answer this in two ways. One, if it's a skill that is logical, reasonable, and realistic, I wish I was a master runner, man. That's the weak point in my triathlon. I wish I was a way better runner than I am. That would be my skill. Otherwise, if it's not realistic, if it's like a superpower type of thing, which I guess it's not. I'd love to be able to stop and pause time. I think pausing time would be really cool. Just no, wait, and then go about your day.
That's a pretty good one. So I'm on the other side of the coin. Is that if I could instantly master any skill, I sure would like to be a lot faster and a lot longer on the bicycle.
You can do that.
Can I just get on a bike and go 200 miles? I can get the long part done, but I'd like to get just a little bit faster. Can I spend more time in the mid-20s cranking?
We haven't had enough conversation between you and I on this subject, but I think you just need that special bike at this point because you've got the hours in the saddle and everything in the engine to go with it. You need to get a carbon fiber aerial bike. You're riding all silly like I am.
That's a good question. Yeah, or that's a good point. I may have to think about the carbon fiber.
Get a TT bike and then see. Well, thanks for listening to us over here at the Zaner MarketCast today. If you have more, or if you need more, just because you can't get enough of us, you can follow us on Facebook at Zaner Ag Hedge or on Twitter and LinkedIn at the Zaner Group. If you have not already, check out our daily Ag Hedge hotline where you can call in every day to hear from our one and only Ted Seifried, who you may have seen on RFD TV and Market to Market. The best part is it's completely free, folks. It's free. Not a dime out of pocket. The information is always free over at Zaner. We love talking to you guys, so don't be strangers. Give us a call. You'll find the number and the sign up for this at the link we've provided. Thanks again, and be sure to like, comment, and follow the podcast to not miss a beat. And we will be back with you as price action develops. Have a great weekend, everyone.